Thank you. So thank you for coming. Today we will cover these four topics. Actually, there are five. I will show you some charts, which some of them we traded, some not, but I'll show you the logic so you can learn and how I trade. We'll go over the rational analysis, the fundamental versus technical analysis, just a brief types of trading. There is an advertisement here in this portion and the trading strategies. I'll go over some of the trading strategies I do every day. And then at the end, I'll show you some charts. And I'll also show you the Facebook chart, why we bought puts on Facebook. Anyway, so the trading is the hardest way to make easy dollar. So trading, as we know, is very hard to learn and to do. But once you know and have a grip on it, then it's a very easy way to make dollars every day. So rational analysis. We talk about technical analysis and we talk about fundamental analysis, but people forget about rational analysis. So rational analysis is like Facebook. So I'll give you the example of Facebook. So my members ask me, why did you buy puts on Facebook? Or when I send the alert on Facebook for in my earnings play, they were asking, why are you sure you want to buy puts on Facebook? So 2 days back, I sent alert on Facebook for calls, and I expected a run up towards earning. And then what happened yesterday? It gapped up. So when it gapped up, that was an exhaustion gap, and I will show you the chart. So, and it has been running for so long. So there was a run up before the earning, and then there's a gap up. And the gap up was in the form of a doji candle. It was just a little candle on top. So we sold the calls and we bought the puts. And today also Facebook ran up, but then it gapped down, 40, 50 points. So that was a rational analysis. There was nothing technically it was saying it will go up, right? Every quarter it beats earning. So someone sent me comment that they are talking about CNBC on CNBC that it will go up. So I said, okay, it's up to you. You go with CNBC. Buy out of the money, puts way out of the money, like 190 strike. So some members they bought it for $1.50, $1.55, all the way to 290. So that was a rational analysis. So rational analysis combines the technical analysis and the fundamental analysis. So that's where you make money the most. When you combine the fundamental and technical together and then use your judgment. So every day you have to use your judgment and decide what the stock is telling you. I'll give you another example. DE, John Deere, yesterday, I think yesterday or the day before yesterday, I sent an alert to buy calls. So one of the members sent me email, I'm long short, I'm long puts. And then he gave me bullet points, 4 points. Tariff, this, like 4 or 5 bullet points. So I told him, okay, it's up to you. If you don't want to buy calls, it's okay. But I am buying DE based on the chart, just based on the chart. The chart is telling me that D wants to go up. So what happened today? D went crazy, and then we added more calls. When the craziness happened in the stock, you need to forget about your position sizing and take advantage of that. Another mistake people make is they are very rigid in their trading. So they always invest, suppose 4%. Doesn't matter what's the condition of the market, doesn't matter how many positions they have open, doesn't matter what the stock is telling at that moment. They just follow one strict rule. That's not the right way of trading. You have to break some rules. The audio is not clear. I don't know. Anyone having problem? Freddy is having problem with my audio. I don't know. So unless other people say, so you have to break the rules. And so I was on the call on a strategy session with one of my member, future coaching student. He became a coaching student today, Pablo. So he was sold on when he saw me trading live in front of him while I told him stop. right now let's stop talking and let's take care of some of the trade. So I started telling him, okay, now you need to add some DE. Do you see 5-minute chart? I showed him right away. I said, look at the 5-minute chart of DE. He was talking to me about the DE, that DE is down and where should be my stop. So I started showing him the charts, and I gave him all the reasons. This is where your stop should be. And so he started talking about we started talking about the tariff, etc. So I said, no, look at the chart. The chart is saying that 134 is the bottom. You need to trust the chart. Don't trust what the tariff and this and that. The news always is late. So the 3-up day move before on 17th of July, I don't have a DE chart, so I can show you because I prepared this presentation early morning, and I just didn't prepare DE. So 3 days ago, there was a 3 consecutive bar. If you look on the DE chart, 17, 18, 19, 3 days continuous move up, 2-day down, 2 move down move, and then the second, then it moved up big time. I think the day before yesterday. So I said that's telling you that there are buyers at 134, and they were in a hurry to buy. That's why I sent the alert. So while we were talking, immediately the D was moving, and I told him, okay, look at the 5-minute chart and see what do you see this 5-minute chart. So what would you do? You should add. So he said, I already have 2 contracts. I said, well, we need to add at least 2 more. And I asked him the cost, and I said, let's buy 2 more contract. You buy 2 contract. I'm gonna buy 10 contract. I added some share. Send alert. So that was the rational analysis. What the stock is telling you at that moment. Forget about the news. And the news came and the stock moved. So trader either concentrate on technical analysis or either they're concentrating on fundamental analysis. They give me all the bullets point about the stock, why the stock should tank, like why Tesla should be going down while it's going up, why the bar should be going down when it is going up. So combine technical versus and fundamental and come up with the common, and then make your judgment. So rational analysis is the common ground. Okay, so always have some logic. So that's where I do the trading based on just the logic. I don't have any indicator on my chart, and I don't teach any indicators. So fundamental versus technical analysis. The fundamental analysis is late in entry and exit. They are often late in entry and exit. If they are early and they have a buying power. So fundamentalists have a buying power. They can hold for a long time, and they have deep pocket. You cannot hold for a long time. So the stock is moving up and down, up and down, up and down, making a base for 3 months, 4 months, maybe 6 months. So we don't have time for that. We want to make money quickly. So fundamental analysis late in entry and exit, or maybe they are early. But if they are early exit, they are definitely late. So all the technical now that you will see the reason on Facebook why the Facebook should go down, and they will talk about that it will go down further, and they will publish the news when the Facebook is about to reverse to the upside. Probably it will reverse tomorrow, who knows. So we'll go long, and then they will publish the report that the Facebook is trash and all that. So they are already late. So fundamental analysis requires long commitment. You have to have a long commitment. So base, 3-month base, 4-month base, up and down, triple bottom or multiple bottoms, etc. Technical analysis keeps us disciplined. If the chart is telling you to exit, you have to exit. Worry about fundamental news coming later. And if the chart is telling you go long, go long. Like AVGO, Broadcom. So the Broadcom are like 10 days ago or something like that is bottom. So it doesn't matter what fundamental, it bottom and it's rising. It will rise, it will cover the gap. I'll show you the chart on AVGO. So, so technical analysis, I sold puts on AVGO and I bought shares. So I have another service where I send the alert to sell puts and we keep the premium. And then in Android base, we will send the alert to buy shares. So technical analysis, analysts can trade in isolation. So you don't need news, you don't need CNBC. So when we travel or I'm travel, suppose we travel to another country where there's no CNBC, etc. So there's no, I travel for 2 months. I didn't watch anything what Trump is saying or what CNBC is saying or Bloomberg saying. I was just looking at the chart and just trading off the chart. and then later on I go online and see what the news is, and then I just read the summary. I don't have to. I don't turn on the TV all the time. Just morning time, and then at 1 o'clock. Technical analysis are price takers versus price makers. So what it means is the fundamental analyst, they create the price, they create the demand, they are the one who go on early in the stage and they hold it for a long time. So they are the one who make the price for the stock. Whereas technical analysts are price takers. So whatever is the price right now, you have to pay that price. You can hold, you can wait for the pullback, etc. But you on a pullback may not come. Like today, for example, DE. So when DE September 145 calls, I look at it. It was trading around 340, 350. So I set the order to buy 350. I didn't get filled. Same thing happened with Pablo. So we raised the price to three. He said, should we buy it, chase it? I said, buy it, but chase, don't put the limit order. Buy it, but just take a look at the ask. So it was 370. I said, let's buy 370. So we bought it at 370. So we were price takers. If we waited and immediately set the order to sell at 550, because the way the stock is moving, we need to exit also fast. So we were price taker, right? So 350 was the price. We couldn't get it. It was trading at 370. I said, okay, let's take it 370. Set the order to sell at 550. But then when we try to sell it, when it reaches like 545 ask, then and then the 510 is the bid. Now we need to sell. So we sell at what, 550. We cannot be rigid. We have to take the price, whatever it is. So set the order to sell at 505 and it got filled. So we were price takers, not the price makers. So, and especially in the case of DE today. Technical analysts understand supply and demand. So just it's a game of supply and demand. Yes, Ko, FB is crashing after earning. You miss all my 10 emails today. I sent 10 emails on earning play. Technical analysts understand supply and demand. So it's all about supply and demand. So if you understand where is the supply zone and where is the demand zone in trading, you will conquer the trading. So what I mean is you have to understand where the support is or where is the resistance. So this is another name of supply and demand. So understand the supply zone and the demand zone. So for example, I give you D. So D today, the way it moved, wherever we sold it, I think we sold it at between 141 and 142, and it was very crazy. So we understood that there are some. This is just a short covering. So another thing you have to know whether is the move is really based on fundamental or based on the short covering. So there's a difference, right? So today D was moving because of the short covering. So there were the people shorted and they were short probably and they were covering it. So the short covering can die down fast, and who knows what happened tomorrow. So understand the supply and demand, and when the demand is created, like Baba yesterday and today, you need to go long on the stock. So understand supply and demand. It's basically support and resistance. So this is the difference between fundamental and technical analyst. And I'm technical analyst, but I use rational analysis. So you combine the two. So how professionals make money in stock market? So professionals make money in stock market by common sense. They are not rigid. So just use common sense. And I'll show you some examples. And let me explain you the Bruce Lee advice if you haven't heard or read before. Bruce Lee said, I fear not the man who has practiced 10,000 kicks once, but I fear the man who has practiced one kick 10,000 times. So you need to practice one kick 10,000 times and just keep repeating, rinse and repeat, and you will conquer anything. So master. So just master a few chart patterns, few technique, and keep using it. So that's what I do. Just whole day, same thing pops up, same thing, same pattern, and I just keep repeating it. That's all I do. And so master the techniques which produces high and fast return. Now this is another thing. We need to. There are so many techniques, right? So there are so many techniques which you can enter, but the stock is moving slowly. There's an opportunity cost for it. So you don't want that kind of technique. You need the technique which produces a quick return. So go for the pattern where go for where the move is. Sometimes I receive email and the stock is like 10 cents up, and then say, is it a good buy? And the stock is dead. So I don't know if it's a good buy or a bad buy. If somebody has told you, there must be a reason for that person to say. Maybe he's expecting some, based on some fundamental. When it starts moving, it will appear on the screen, and when it appears on the screen, the stock should knock at your door and say, "Hey, look at me, I'm moving. Take a look." And then you look, and then you say, "Yeah, you are moving, but you already moved too much. So I don't want to buy you. So ignore that stock." But if the stock says, "Hey, I'm moving," and then you say, "Yeah, you're moving and you still have some potential, so I'll buy that stock." So you have to know which one is moving and which has some potential left for you to make money. And then in case you are wrong, where you will exit, you have to know that too. So master the techniques which produces high and fast return, so quick return, and keep rotating your money. So there are types of trading. So I'm sure you know, but some of you, if you don't know, then I just go through types of trading. Scalp trading, day trading, swing, position, and long term. So scalp trading is scalping for 5 cents, 10 cents. You have to be very sharp in scalp trading. Precision is required because you're just going for 5 cents, 2 cents, 3 cents, and you have to trade big quantity to make some money. And you can lose if you're not, if you don't exit quickly, boy, you will lose a lot of money. So I don't do scalping. Day trading means that you buy today and you sell today. You have to close all your position today if you are a day trader. So you're looking for that move, 40 cents, 50 cents, dollar, 80 cents, depending on the volatility of the stock. And you go, at the end, you close your shop. So you go cash. So that's the objective of a scalper and day trading. The swing trading is you trade from 1 to 7 days, right? So, or 1 to 5 days, different definition. So you hold overnight. Even if you buy on Friday, you hold it for Monday, Tuesday, and then you sell it in 5 to 7 days. Ideally, the swing trading of 1 to 3. If the entry is so perfect and there is a momentum behind, it should last only 3 days. So you buy today, you sell it in 3 days or 5 days, 7 days. But some can go on for 14 days, etc., or more. Position trading is like 1 month. So I have a different account for different purposes. So position trading is for till the stock hits the target. I have a long-term target, not a very long-term, just a mid-term target. So I do I buy the stocks, shares. So in that, I hold for the major target. So when the major target hits, then I sell the shares. Swing trading is a short-term move, 3, 4%, 5% move in the stock, and you get out. Long-term trading is you buy and hold for like long-term, 1 year, 2 year, or maybe more. It's like, for instance, for your retirement. So you selected stocks like Nvidia, Apple, Facebook, Home Depot, Lowe's, Adobe, all these stocks, they can go into long-term trading. So you based on fundamentals good, technicals are good, and you hold it in your retirement account or something, and or you buy long leap option and you hold it. So these are the 5 kinds of trading. We do swing and position, swing trading, and I also do position trading. So let me explain the beauty of swing trading, why the swing trading is the best way for me and for others. That's what I noticed. So the beauty of swing trading is a combination of 2 concepts. So it combines the concept of 2 types of trading: the slower pace of investing and quicker pace of day trading. So it's in between day trading and investing. So day trading is for daily, right? And you buy today and you sell today. You go short today and you cover today. And investing is long term. So swing trading is in between 1 to 7 days. You go for that quick short move and then you exit. So the return could be astronomical if you combine, if your entry is correct and the stock moves right away in your favor, and you exit in 2, 3 days. So The swing trading in stock all gives you a very good return, but combine it with option, it's even better. So I'll explain. When you combine it with option, the return is like 40 to 100% return. So the objective of swing trading is that you maximize profits in short period of time. So you quickly rotate. Like today we have 6 winners. So we bought it like 2 days ago. All this APC, oil stock, Exxon, I even forget GD and some DE and some others. What else? Baba we sold, Microsoft. So all these we bought 2 days ago and sold today. So quick move. And then you combine the move in the market. If you expect the move coming up to the upside, then it helps you in the swing trading. So you close it faster because the stock helps you. The market helps you in your profit, and then you minimize the downside risk. So you have a smaller loss. So your loss is because your entry is suppose your entry is 80, your stop is suppose at 76, 75, and your target is 87. So you have a downside. You define your downside, and you know your upside, and then you just wait for the move to occur. So the move in the stock, 3 to 5% move in the stock is equal to 40 to 100% move in the option. So stock trading gives you 3 to 7% in the swing. In swing, if you trade a stock, it should give you 3 to 7% return. But when you combine with when if you trade option and your entry is correct and quick, it could be the return could be 40 to 100% or even more. So generally, it's between 40 to 50, 60%. Sometimes it's like 25%. So one or two is like that, but generally it should fall in between 40 to 100% return in option trading. So it's how you trade swing stocks. So I tell you what is wrong with what is wrong. No, yeah, what is wrong? The wrong is I'm reading Freddie Molina's comment again. There is something wrong with the audio. I don't know, Freddie. Just please fix it. There's nobody else is complaining about the audio, so I cannot fix it. So please fix it. Call the GoToWebinar and maybe they can help you. So swing trader tools, no need for perfect indicator. I don't have any indicator on my chart. So I used to have MACD, RSI, ADX, Arun, all these lined up. They were late. So I don't use it, but you can use it provided it helps you in your entry and tells you the upcoming move or exit. I don't personally use it, so I don't have any perfect indicator. So people ask like today, what was the indicator which told you if we will go down? Well, I don't know. There's no indicator. Just I looked at it and say, okay, this is exhaustion gap. It has been running for so long, and then it gapped up and did nothing. So that was my indicator. So there's no perfect indicator for swing trader. Identify a proven pattern. So just keep using the same pattern. So every day I use the same pattern. Not the same, but a stack of few pattern, and I just repeat it. Keep using it, and they work. If they don't work, that's where I occur the loss, right? So something went wrong, and I either read it incorrectly, or the news came and trumped the reading of the it trumps the technical analysis. So it goes technical analysis goes through the trash can, and the stock is doing something else. So that's where the technical analysis fails, because the news came and did something else. So but if the odds, you stack your odds in your favor by identifying the proven pattern and execute same techniques daily. So it's daily thing. It's like daily. You wake up, you take shower, you take coffee, then you go to work. It's the same thing daily, same techniques. You just turn on the computer and say, okay, what is today? So it's the same thing is coming up. It doesn't matter if the dog, cat, donkey, whatever the stock is, it's just doing the same thing. And then you use your judgment. So every day you say, okay, I have seen this before. It's happening again. I'm gonna use it. We're going to use it, apply the same techniques again, and that's it. So use your judgment and your skills. So as you trade, you build your expertise, you have your skills developed. So technical, the trading needs the skills and expertise. So you develop it over time. It doesn't just come right away. You need like one member I have, he's here, Ryan. He's been training with me for 2 years. He's very good. Others have developed their skills. So 2 years means 8 hours a day. You can do the calculation. 8 hours a day, 250 days multiplied by two. So 500 days multiplied by eight is like 4,000 hours. So he put in 4,000 hours plus maybe offline. So at least 5,000 hours you put in, and then you develop the skill. But experts say anything you need to acquire is need at least 10,000 hours. So if you're trading for 15 years, it's like 30,000 hours, and you have to exercise the flexibility. So you have to be flexible when to go more than what you normally risk, when you have to risk less uh, based on the different conditions. So you have to exercise flexibility. You cannot be just rigid. So identify the edge. So what is the edge you have in at that moment? So at that moment you have edge, you will make money. So I'll give you example. The edge on a Facebook was that the chances of Facebook dropping big time was higher than the chances of Facebook going up was, right? Because Facebook has been going up for so long. So that was the edge. So when you have an edge, then you execute. Once you identify the edge, then you say, okay, let me open my toolbox or my war chest and see what I can pull out and apply. So I said, okay, now I think so. My edge is that the Facebook is going up for so long, little mistake, and it can come down. And it can come down big because every quarter it beats earnings. So let me go way out of the money puts. Let me buy way out of the money put like 190 strike. So that was my edge. And then I said, what I need to do? I don't need to buy a strangle or straddle. I just buy way out of the money put cheap. If it works, it will give me a big return. And I had made money already in the call, so I could afford to lose that. So it could have expired worthless. But so that was the edge. So flexibility. Same thing today. When D is moving aggressively, I want to add more, and that is my last move. As long as it moves more than what I pay for, I'm making money, extra money on what I bought. So if I buy at 370 and if I sell at $4, even at 380, I'm making extra money. So that's my edge. And then the trader fails here, right here, understand broader markets and indices. So you have to know what the market is doing. So today the Dow Jones was negative and the NASDAQ was positive. So you have to understand that the NASDAQ is positive, Dow Jones is negative, why Dow Jones is negative, which one is leading, which one is lagging, what the other stocks are doing, what the other market can do, whether the Dow Jones can cover the ground and come positive, and what the futures are doing. So the Nasdaq stocks are moving. So the Nasdaq is green. So all that you combine, and then you come up with the list of all the stocks and you trade accordingly. So in other words, you stack probability in your favor. So you identify the stocks, which one to buy or which one to go short. So so in other words, no need for perfect indicator. There's no need. I don't have any indicator on my chart. Anytime, anywhere, no indicator. I don't know any indicator. I identify a proven pattern. So I use pattern. I execute same technique daily. I just use these judgment skills, expertise. Every day I just say, look at it and I say, yeah, this looks like a buy. I'm gonna buy it. I go long. So I go long. Or like today, Yelp and another one. I'll show you the chart. So it looks like Yelp is going up. Looks like MMM is going up. So I show you the chart. You don't need to know any indicator. Just look at it and say, yeah, it looks like obvious. So one time I was sitting in some business meeting, and there was a lady who became my friend, good friend now. So Andrea. So Andrea was sitting next to me, and I was also looking at my chart. So I opened my laptop and I showed her the chart. She doesn't know anything about trading. So I showed her one chart, and I said, it was hourly chart. So I showed Andrea and I said, okay, Andrea, you don't know anything about trading. She said, yeah, I don't know. I said, okay, look at this chart and tell me if the stock is going up or is going down. So she looked at it and then she said, yeah, it looks like it's going up. So I said, you are right. Then I showed her another chart. I said, look at this hourly chart and tell me if it's going down or up. She said, it's going down. Look, it's clearly it's going down. I said, yes, this is going down. So that was her. Now she wants to be my student. So that was her training, 2 minutes. I showed her chart, hourly chart, and told her, and then she said, yeah, it looks like going up, it looks like going down. And that's what the stock did. So exercise flexibility. You have to change your rules from time to time. Just don't go crazy with if you break the rule and then you incur big loss, but just go for that edge at that time, the edge you have at that moment, and you take advantage of it. So in order to do that, you have to change your mindset. So you have to start thinking in terms of what edge I have, what the stock is telling me to do. So sometimes we just get paralyzed and don't do anything. We just sit there and do nothing. So don't do that. Do something. So take action and understand the broader markets and indices and stack your probability every day in your favor. So when your probability is in your favor, then also you look at the profitability. So how much profit you have. Sometimes even the probability is low, but the profitability. No, Susan, I'm not showing any. I'm not showing chart or what? Are you seeing my slides or no? Yes or no? I think I'm showing the yes, no, yes, no, no. I'm not showing the chart. I'm showing the text. Yes, I am talking theoretical. If you're waiting for the chart, please come back in 20 minutes. I'll show you the chart. So I'm talking theoretical right now, text only. So there's no chart, Susan and others. So if you already know this, you can come back after 15 minutes, please. So all right. So stack probability in your favor. I know when I say I'm going to show charts, like in my webinar in email, 200 people show up. And when I say I'm going to talk something theoretical, then like 30% people show up. And that's the most important part. They miss it. So I'm trying to explain. So stack probability in your favor and look for the profitability also. So sometimes the probability is low, but the profitability is so high that you need to go for that trade. You need to go for that trade, even if the probability is low. But because the profitability is so high, the gain is so high, chances that you should go for that trade. And sometimes the probability is so high, but the gain is so low, you don't want to go into that trade because you will make little. Even if it's like 90% probability of being a winner and you make only 5% in option, that's not a good trade. Whereas if you the probability is only 10%, you will be winner, and then the gain could be 200%. So you should go for that kind of trade. So stack probability and profitability in your favor. Okay. And okay, so the uniqueness of swing trading. So the easiest trade comes before crowd notices. So always remember this, in the swing trading, you need to go for those trades where crowd notice later and you notice first. So is in the initial stage. And fortune is made by singles, not home run. So keep making 30%, 40%, and keep churning the account, and it will double faster than you realize. And don't look for the home run. So a lot of every day I see that they when I send the sell alert and then I receive email, why we are selling this now? What made you sell this? And only it has a room to go. So I said, okay, it has been going for 3 days. It can go for another 3 days, but our objective is complete. The stock has gone for 3 days up. We need to close it. It's hitting some target. And in option, if you don't sell, then all the gains are lost. So once in a while, you will have a home run and it will take care of losses, but go for the singles and smooth and rising equity curve. So you need to have a equity curve which is moving smoothly rather than in a zigzag fashion. So we do have a swing service. This is the part where advertisement come in. You can go for the coffee if you remember. So this is my advertisement for you. So we do have a swing option trading service. We do provide real-time trade alerts. So it's through email, direct real-time during the market. We provide specific buy price, 3 sell targets, and a stop. A stop is generally 70% of the buy price. I post the charts on Facebook or I show it through webinar, and I try to educate you via email and weekly webinar like I'm doing right now. I have a Facebook group where there are 3,500 members. You can join that Facebook group. There is a private group for coaching students. And then I give you 82-page trading system guidebook when you join. So you can read the material in it. And then you will receive email every day, at least 3 times a week. You keep receiving emails on various topics. All right. And there's no shortage of profitable ideas, and I try to do my due diligence. I trade in my own account of what I send, and it just helps build your confidence and portfolio growth and improve your own technical analysis. So traders who trade, they not only grow their portfolio, they become their own independent trader. I have many, many examples. Okay, these are the testimonials you can read on the website. And you can join this service for $287 instead of $337. I give you $50 off. I'll send you email. If you are not a member, you can join, and you should not be receiving email if you are already a swing member. So that's the way the email is designed. All right. So if you are interested, you can join tomorrow morning. You will receive an email. So now I tell you some of the strategies I use in a short, like 5 minute, 10 minute time. So the breakout strategy, breakout reversal, and opening range breakout strategy. So I these are my favorite strategies, and I use it every day. So breakout strategy means the stock is breaking out, like Microsoft did 2 days ago. It went up on earning and then came down, and then it started moving faster 2 days ago. So that was a breakout for me. So or breakout reversal. So stock pulls back to some support level, and then boom, it goes up fast. So that's where the money is. The stock pulls to some support and then rises sharply on the volume. So that's breakout reversal strategy. The breakout strategy is where the stock is breaking some resistance or some consolidation level, and it just breaks through that resistance or make new 52-week high or a new yearly high or whatever. Some kind of a high is making or breaking the resistance. So that's a breakout strategy. The opening range breakout strategy is you have to implement it so properly, either manually or through automatic. So I've done automatic thing, programming, hired someone to do it for me. So the concept is that in the morning there's so many stocks which move, right? So every day there's 8,000 stocks move. So you shouldn't be watching 8,000 stocks first of all. You should have a basket of 300 stocks, maybe another 300 in separate basket. So like you have 300 stocks. So I have that. So I put this strategy on that 300 stock. So what I do is, suppose 300 stocks open is like a horse race. All the horses are moving. So many stocks starts moving. So what I do is say, okay, what are those stocks which are moving after 5 minutes? It's still moving after 5 minutes. I don't want to know anything before 5 minutes. So my screen is blank. As soon as 5 minutes pass, some stocks show up, 10, 15 stocks show up, which are moving after 5 minutes. So I take a look at it and then I say, okay, these are the ones which are moving. Anyone, I have it. If I have it, then I know, okay, it's a good thing. So after 5 minutes, then I have another window for 15 minutes. So after 15 minutes, some stocks appear in that window. So I take a look at that window. So there are less stocks. So some stocks are still moving after 15 minutes. So I know that, okay, these are the stocks still moving and there's something going on. So I start taking a look at it. And then I have a 30-minute window, and then I have an hourly window. So 30-minute window is the key one, and I start paying attention to those stocks which are still moving after 30 minutes. And then I decide on a pullback which one to buy. So that one, and it has to have some volume, so above normal volume, and like the volume which it has normally that time of the day. So normally, if suppose the stock trading 2 million shares, early morning, it trades about 2 million shares. Then you say, okay, 2 million bars on a 5 minute chart. I look at it, and today the bars are higher. So something is going on, and the stock is still moving. So that's the stock you need to pay attention and then evaluate and go for it. So that's the opening range breakout strategy. Now the money making strategy. These are another 4 strategies which I use a lot and every day. And the favorite is this one, gap down reversal for going long. I don't use gap up reversal. I use gap down reversal. So I will explain. So the gap up is simply means the stock gaps above the closing price of yesterday. So if the stock closed at 180, it opened at 181. So that's a gap up. So I have another window where I said, okay, all the stocks which have gap up above at least 80 cents, show me only those stocks. And then show me those stocks which have gapped up 80 cents and still trading up after 15 minutes. So there's another filter, right? So there are 2 filters. The filter is gap up above 80 cents above yesterday's close. That's one filter. Then another filter, put it there that, okay, not only it gapped up, but it's still moving after 15 minutes. So the stock gap up 80 cents and above, and it's still moving after 15 minutes. So what's going on? So then I start taking a look at it. If now then I start paying attention. This is where I use my own judgment. And so I become a discretionary trader. So from mechanical, I jump to discretionary. So I look at that chart and I say, okay, it gapped up above resistance. So if it broke some resistance, then that gap up is a good gap up for me. I look at the pullback and then go the pullback to, if it pulls back to that previous resistance level and then bounces up, then it means that resistance has become a support. So that's where I want to go long. If the stock has gap up just at the resistance level and just dwindling, then it will probably fail. It will not move. Next day it will fall. So that's the gap up. I ignore it. And the gap down is when the stock gaps down, it gaps down. You think of this like this. The news came in the pre-market, so the stocks have some news, and it's already gapping down and it's trading lower. And then when the market opens, it gaps down, and it gaps down, suppose $3-4, immediately, at open. So the buyers, those who are freaking out, they sold it. They have some reason to sell, so they sold it. But then there are other buyers, institutions or someone who thinks that's a good value, so they start buying it. So if you can identify the reversal and if you know the techniques, then you can go long on it and make quick bucks. So usually the gap down I have noticed it occurs at 50-day moving average or 200-day moving average. If it's not 200-day or 50-day, it gaps down at some support. So if you know that support level, you can go long at that time or watch what it's doing at the gap down. If it continues going down, then you know your upper limit resistance, and then you can go short or buy put. If the stock does nothing, you're just wasting your time, just ignore it. If it reverses sharply, you can make some money quickly on a gap down reversal. So this is what I do. When the stock gaps down, then I apply my judgment that, okay, this stock has bottomed now and it's gonna rise, and it will rise further. So I'll show you some charts I think I have on the gap down reversal. On a gap up reversal, it means the stock just gap up and then it hits some resistance and it starts falling down. So I don't do this. I sell the existing position. I don't go short on gap up reversal. I sell my open positions. We do have a 7-month coaching program. If you're interested, send me email. You see my email on the screen. Ask us at financialmarketwizard.com and we can talk for 75 minutes. So here are the charts. Finally, we arrived on the chart. So I use TradeStation, Dave. So I just use TradeStation, everything there. All right, so this is the chart of AABA and 6th of July. Today is what? 25th. So I think I was preparing for presentation and I prepared the chart and just kept it on this presentation. So AABA 6th of July. Let me see what I have. Okay, I can explain this. I don't know what happened on AABA after 6th of July. So this chart shouldn't be there, but I can explain. So let me show you this what I'm trying to show. When the stock, yeah, this is the one which gap down reversal pattern. So you see this, the stock, this Alta Baba, it moves just like a Baba. So you buy Baba or you buy this one. So it was holding this 200-day moving average, right? You can see this. And what happened? It gapped down. And how I know it gapped down? Because this candle is white candle, and the white candle is supposed to be, it means that the close is higher than the open. So if the close is higher than open is here and close is here. So if the open is here and previous close was here, there was a gap down here. So this is an example of a gap down reversal. So if at open, if you had look at this chart, right at the 6:30 a.m. Pacific, you would see this is at this candle. I mean, the candle is right here. Now what happened? Suddenly the buyers just at the right at the open, they start buying it. So this is where your skills come. There's no indicator which telling you that I don't know. Maybe there is indicator I'm not aware of. I'm sure there is some which will tell you that there's a buying going on, but I don't have that indicator. So uh, as soon as you see the reversal sharply on your intraday chart, you would first indication will come when it goes above the this above this candle. Then the second is then when it crosses, suppose this 200-day moving average, that's your another confirmation that this one is wants to go up and not going down. And the way you can also look at there's a continuous activity. So I don't recall this I mean trade on what happened on 6th of July, but if I look at it, I would see the continuous move up, take, like DHR was doing 2 days ago. So if you look at DHR, that was what it was doing. So exactly the same phenomena, tick, every take is going up. So when it just starts to happen, then it means there's a gap down reversal occurring, and you should go long. And then what happened? The stock just pulled back and sit at 200-day moving average, and then it fell back and then formed a hammer. So this is another confirmation, pull back and close above 200-day. So how many times the stock close above 200-day? This is almost close at 200-day, this is close at 200-day, this is close 200-day, this is close 200-day, this is 200-day, this is 200-day. 1 2 3 4 5 6 times it closed at 200-day moving average. So they believe this is a support, and you should believe that too. So you should go long. There's no indicator here telling you to go short. So this is what I'm trying to explain. This is Apple. I created this chart on 24th of July. So the reason I created is that it's hugging this line, which can act as a resistance or support. So it depends what it does next. So there is a pattern called dumpling top. Apple can form a dumpling top where the stock keeps going on the sideway like this, took on the sideway and do nothing. So the two things can happen. It can either break to the upside and then it continues upward, or just simply gaps down. So what happens here after this is kind of risky. So we had calls on Apple and we sold it. Yesterday we closed Apple because it's just doing this. When the stock starts doing this, you need to be aware of that. It can just simply gap down or break out. So there is a probability of it gapping down. If it gaps down, then there's a sure short shock. So it's a sure short. You should short that stock. And if it breaks above, then you know that this is the support and it should hold the support. So that's what I I don't know what Apple will do tomorrow, but it was up slightly today. This is APC chart. So this is the logic I had on APC, and we went long, close today. See this 50-day moving average? It was just sitting on 50-day. Took is just doing that. So if the stock is doing like a ping pong on 50-day moving average, so this is your support. So if it's suppose what is the odd if it's going down? It can go down. There's no written that rule that it will not, but the chances are it will go high. And then what I did is, because APC is a um, energy stock, so I look at the crude future, and so based on the crude future, I said, okay, I need to go long on a crude stock. So out of the few crude stocks I have in my basket, I chose APC. So in other words, you need to have a separate basket of each commodity stock and related stocks. So prepare a separate basket, and then when something is moving, like crude is moving, then you look at your crude stock and you say, okay, I need to go and find a crude stock which is giving me a good clear buy signal or clear sell signal. So I chose APC, and then next today it went up. I think, yeah, today we closed it. So this is what happened yesterday. See, and I don't have today's chart, so I don't know what happened. I mean, I know, but I don't have a chart. I sold it, I made money. So this is the example of AVGO Broadcom. So you see, this is what AVGO gave clear buy signal. So it gapped down on earning, but look at this hammer. So this hammer is clear buy indication. You cannot um, go against this hammer. If you go against this hammer, you will lose money. So it gapped down here and then it reversed. So this is your clear buy signal. You cannot go against it. If you look at your FB chart way back when there was a news, that news came out, data leak, etc., it did the same thing. And then FB just kept going till this afternoon, and now it tanked. So same thing, same pattern. When you see it, you have an edge. So you say, I have an edge and I should go long. So this reversal is just, remaining sellers. They are trying to break through and fail. So continuous move up, AVGO is going long. And this is what will happen. It will just keep going up and will one day, maybe in a month or so, it will fill this gap. It will come here. You will be surprised. It will come here. So we have puts which almost don't have any premium. So 200 strike, so it will expire worthless. We keep the premium. So if you don't have, you can have a spread. You can you can create a vertical spread. You can go long on a 220, 215 strike and sell 240, 245 strikes. So it's a wide spread you can have, and just keep it for 50, 60 days, and AVGO will come here around 240. So it will fill the gap. It has a big potential. So this kind of chart is my favorite chart because it never fails. It just clear indication of going up. It will go up and fill the gap. So it's a clear chart for making money. Okay, so today is this is what it did today. It moved up further. So it closed at 220. Baba. So today, this is what Baba did yesterday. So we had long on Baba, and then it pulled back to this trend line. So yesterday, Baba gave a minor signal right here that it wants to go up. It held this trend line, and then it closed above this 200-day moving average. So this was a minor buy signal, or you can say aggressive buy signal. But then today it gapped up. No, not today, yesterday. So this was another buy signal. So similar to go long on Baba. You don't have to wait for any indicator or anyone or to tell you what to do, or read a report. There's nothing to read. There's no one need to tell you. There's no indicator. You need to go long. As soon as you see this and then gap up, you go long and sell something somewhere here. So that's what we did. I sold it here. Although it can go up and close this gap, but I sold it today. And the reason I sold today, when you have 5, 6 winners in a row in your position, you need to sell because the profit adds up. And the market has reversed, and it was up nicely. So you need to sell some to cover, get some cash. So this is what Baba did today. So we sold it. I think it went up. I prepared this chart at 9:55 a.m. Pacific, so it was trading at 193. but it was trading at 198 today. So another 5-point move came after preparing the chart. This is early morning chart. So 198, we closed it, and 198 and 10 cents. This is Citigroup. So I base my entry on Citigroup just based on this. So if you look at the Citigroup, so why I did this, because the financials were moving. So we had JPM in financials, and financials were moving, and Goldman Sachs. So I said, okay, what other I can buy? So I look at the C. I said, oh, C is moving like this. So it bouncing off the support line. Okay, this looks bullish, and all the other financials are moving. So I went long. I bought call, and the target was this, between this resistance line and a 200-day moving average. So today, when it came here, we sold it. We sold the C calls. So this was just the end. This is the entry. There's nothing, no indicator here. And this is what happened yesterday. And I don't have today's chart. I didn't get the time to prepare. I was so busy watching Facebook after hours. So no chart for today. So all my charts are yesterday's chart. So Caterpillar, this is what happened to Caterpillar. Again, Caterpillar also moved today, and along with DE. So it gapped up and it hit the resistance. So this is a strong resistance here. But today it moved up, so it broke this resistance. So now you need to watch for Caterpillar. I think earning is coming up, so it can go towards 146, 147. This is what I was talking about, DHR, and I went long just based on this chart, and we are in profit. So what this DHR did, so it gapped down here, right? And then on 23rd, it did the reversal, complete reversal. So this is a reversal pattern. So bearish and bullish. So when you combine bearish with bullish, you have to take the recent action. So what's the recent action? The recent action is bullish. So on 23rd July, bullish. So all those who shorted, they started covering here because they see this pattern. So I went long. I said, okay, let's go buy DHR calls, and it went up. See, it went up, and it went further up. And I don't have today's chart, so it went up. We'll hold a little bit more till it goes somewhere here close to one previous level, and then we sell it. I don't need to wait for the train to arrive at the station. I jump before the train reaches the station so that I can go home. Don't need to take taxi. So this is where I will sell between 105 and 106. Now Facebook, so this chart is 6th of July. We were long. I prepared the chart on 6th of July, and I think we were long. We sold the calls. So just want to show you what happened to Facebook. This is recent chart, 23rd of July. So Facebook is going up since this is the day. If you were on a webinar, I explained this, that the Facebook has bottomed, and it bottomed solidly, and everybody should go long on Facebook. And this was the hammer. So this is clear signal of Facebook going long, and I repeated many times. So since then, Facebook is going up, right? So 149 is the bottom, and it just kept going up, and 210, 218. So if before earning, if it's going up like this, what are the chances that it will continue going up, not fall? Well, you have to think like that. So then you decide, you said, okay, what is my edge? So edge is not towards going long, edge is towards going short. So go short, 190 strike, now it's trading at here. You see, right now the Facebook is right here, it filled the gap. It can come down here at 160 level and fill the gap. So it's trading here before the presentation started. So this is what it was doing on top. So I said, okay, let's go close the call position and go short. This is where we close the long position, because this is considered as the exhaustion gap. So Facebook got exhausted right here, but they were talking about going long. There's that reason. So the chart is saying the edge is towards the downside, not to the upside, and that's it. That's what happened to Facebook. Now GD, We went long on GD somewhere here. It was hugging the 50-day moving average. So the defense stocks were moving. So I said, okay, we go long. And this is what happened yesterday. And this is what happened today. So you see, same logic. The defense stocks moving, news is there. It's hugging the 50-day moving average. It's about to break, go long, and then sold today. When it hit 200, I sold it. It went to 203 later, but I sold between. It was kind of crazy. So when the crazy moves starts occurring, I sell my position. I worry about it later. Same thing like DE today was a crazy move. One time it was down 270, then it went up, then went down, went up. It was just crazy. So when crazy things happen, I sell because that craziness may not come back and I will lose. So I sell, I better exit fast. So I sold GD and I sold GD. This JD, so JD, Amazon of China. So I went long on JD. I have a long position on JD simply because multiple bottoms here, multiple bottoms. You see bottom here at 36 level, 35 level. So what are the chances of JD going down than going up? So the chances of it's going up is higher than going down. So I went long on JD yesterday and today it went up. I don't have a, yeah, I have a chart. Okay. So yesterday I went on 24th of July. I went, I think I went here long, somewhere 1037, and then it did this, and today is still hugging at 36. So I'm in a break even right now. I didn't look at my position. So JD is about, if it breaks, then you should go long. So just wait, keep watching it. You need an acceleration here, and it will go up. This is the chart of Triple M. So when you see a chart like this, the candle, the bullish candle, is telling you the bottom has formed. So if you go on the left, you see these hammers. These are the support levels. And again, it did the same thing, support, exactly like someone drew a line. So you see this line. I didn't draw this line. The stock did itself at 190 level here, and then exactly to the penny it dropped, and some program kicked in and bought it. So triple M was going up yesterday, and it went up today too, a little bit up. You see, so how they came. So when you see this phenomena happening, you just go long. You don't wait for anyone to tell you not to go long. This is Microsoft. So we went long on Microsoft. So this is what I'm talking about. This is what I saw, and Fast and Furious. So we had a Microsoft position and we closed before earning somewhere here, and then it went up. I do have Microsoft in my retirement account. So it gapped up and then it pulled back. So this is a bearish candle, and then it was doing this. So it did not gap. It did not come to fill the gap. So sometimes the gap is not filled, and people expect that the gap will fill, but it doesn't fill. And so if you look at the intraday chart, you will see there was a fast and furious move up. So I went long on Microsoft, and this is what it did yesterday and today's chart. So today is doing this. I sold it. I think I sold at close. So when I sold at close, I sold it at higher level at 110. I prepared this chart at 10:16 Pacific AM. So I sold it at high level around 110. So I logged this one just because of the fast and furious move. Do you see this candle fast and furious reversal? That's what I saw, and I went long. Netflix. So Netflix has bottomed. Again, is Netflix is doing the same thing. Netflix has bottomed. Look at this chart. So it gapped down, and see here, 340 is your bottom. And since then it's just this is just a pullback. This is just a minor pullback, and Netflix is long. Everybody needs to be long on Netflix, and put a stop right here, 340. It won't go at 340. It will just continue. It will go up, and there's a gap here, and it will go and make a new high. So Netflix is long. So I am long on Netflix. So I receive emails saying, okay, what we do if it's going down? So just say, hold it. So you have to see this level here, hold it. Hold Netflix for long, it's gonna make money. Okay, so on 23rd, this chart, okay, this chart I prepared on 20th July, and this is 23rd July. So it's still holding it right on 23rd, and I don't have a chart for 24th, 25th. I forgot. So today Netflix was up. So keep an eye on Netflix. It's going up. I went long on Nvidia, and I have a stock in my retirement, and this is the reason I went long on Nvidia, simply because of this candle. So this candle telling me the bullishness in the stock. So there was the sellers, and then buyers took over, and they stopped, and then took the Nvidia here. And on 24th, yesterday, when I took the screenshot, it was trying to cross this 254 level. So once the Nvidia crosses 254, 255, it's gonna go up. So I'm long on Nvidia, and earning is coming up, I think. And so there's a so when the earning is coming up and the stock is telling you this bullish, there is anticipation, earning anticipation. So you don't care. You can go long. You can exit before the earning and hold it till earning. Don't hold if you're in profit. Don't hold over the earning. Exit before, and then you evaluate your position. That what edge I have. We traded in earning. We traded JPM. We had an edge on JPM that it will go up, and it went up. We traded IBM. People saying IBM will tank because every time quarter it tank. We bought calls on IBM on earning. It went up. Facebook, we bought puts on Facebook because they say, where is the edge? The edge is to the downside. So thought process, thinking about it, how it can react. And if it falls, where it will fall. Or if it you are puts, how much you are willing to risk. So you're willing to risk less and make big bucks. So if you do that, you will be a winner. So NVIDIA is going up. And based on this candle, I went long on NVIDIA. Yeah, so it's still hugging the 50-day moving average. Today's chart is still showing this. Now PG, I don't have any position on PG, but I prepared the chart for you to show. So this candle is a bullish candle. So there is no wick here, there is no wick here. This is complete bullish. And I didn't see this yesterday. I noticed today. So I said, okay, let me watch. If it breaks this 79 level, I will go long. So I'm just watching for a further break up. And then there is no territory. So if you look back, there's complete white space on the left side, right? You don't see anything going on. It's like a Montana here. It's clear. The resistance is way back in February. So is if it breaks here, it's just going up. So I will go long on PG. So I'm just watching it. So this is on my watch list. UNP, we traded UNP. We bought UNP calls, and I'm explaining the thought process on UNP. We have UNP. So I think we bought September 140 calls based on this candle and this line. And then UNP started moving up. And on 23rd, when it started doing this, I sent an alert to buy more September 140 calls and buy September 150 calls. So any profit we make from September 140, we are already in profit. So we make profit. And then if it continues to go up, we buy cheap calls, which is 150 strike, and we'll make money on that too. And if we don't, then we will give up back some profit from what we make here. So I have two strikes, 140 and 150, and both are in money. 150, I have a lot of strike contract because cheaper, so I bought more, bought a contract. So I will sell both, or I will sell one, like September 140, if it goes to, let me see if I have a chart on UNP. Okay, so this is today's chart. So it went to 146, and this is where I bought 150 strike this day. I bought many when 150 strike when it was moving up like this. I bought more 150 strike. I had 140. I bought some 140. So I did not sell this on this. I could have exited here, but now I'm waiting for another leg up and sell 140 first. And then when the UNP reaches 150, I sell my 150 strike and close it because the premium will be at maximum at 150 strike. So I'll just make a maximum gain. So this is the logic of UNP. UTX, I did not trade UTX. I just kept watching it and it just keep flying. So this is a chart of UTX. Yeah, yesterday it made this, and then I don't have a chart for today. It went up today also, so I missed this move. So when you see this kind of move, you need to go long, and this is called rising three method. So in rising three method, what the stock does is previously the stock is bullish, and then for 2-3 days it pulls back, and then another rise come. So this was a clear bullish signal. I missed it, and today it moved up also. So this is a clear signal that UTX is going up. It will go higher. Here is your resistance, 138 level, but probably it will conquer it. So because this occurred in March and it's July today, so probably it will. There will be some sellers at this level, and then it will conquer. So watch UTX is going up. So any pullback towards the midpoint right here, 131, 132, I'll go long on UTX. WUBA. So WUBA, I'm long. Today I went long and I'm already in profit. So all the trades where you come into profit right away are the great trades. So you initiate your position with this little money, right? You say, okay, I could be wrong. I could be reading wrong, and I may lose. So if I lose, I lose less. But if I'm right, I will add more to it later. So the chart prepared was later at 9:49, but I entered WUBA before this chart was taken. I entered before, and then I took the screenshot. So WUBA is going up, and the reason I went long is yesterday I saw that. So the trade which you are stocking makes you the most money. So yesterday I saw WUBA going up like this. So I said, damn, I missed this one. So now what to do? Wait. So I said, okay, I wait for it. And I was watching it, and in the morning, what happened? Sudden surge to the upside. So I said, okay, this is it. It's not coming down, it's going up. So I better buy calls. I bought calls and alert, boom, boom, boom. Now it's 9:49. It's this. So it's going up. You don't need any indicator to tell you what the WUBA will do. It will just keep going up. So WUBA is long. The next one is Exxon. So we had position on this. Yeah, we bought yesterday and we sold today simply because of the crude moving up, and we had APC, but I said, okay, I can add another one. So I usually don't buy more than two in the same industry group. So more than two is risky. You can lose in all three. Risking in two is okay. So I bought, we had APC on 23rd, and then on Exxon, and I saw this kind of move. I was hesitating, buy or don't buy, wait or don't wait, just buy it or wait because of this congestion. But then I decided that I better buy because the odds are in my favor. So I went long on Exxon and I sent the alert and it went up. So if you look at it today, you will see it's gone up. This is Yelp chart. I don't have any Yelp. I think I sold the puts on Yelp, 36 strike. Uh, yeah, I think I sold the puts, and I give you the reason. So Yelp, I bought Yelp based on this support. So you see support at 36, 37, this candle, and support here, then support here. So support here. So Yelp is saying that it doesn't want to go down below 36, 37. So I sold the puts on Yelp, 36 strike. So I'm expecting it will not go below 36 and I get to keep the premium. So I just sold it and I bought some shares. Tomorrow, so there's no time decay in shares, and time decay is working again in my favor when I sell the puts. So and I think I send the alert also to sell the puts on Yelp, and in my intraday service to buy Yelp shares. So tomorrow, if Yelp just hang around here, I'll just keep watching it, seeing what the Yelp is doing. And the moment I see the Yelp is surging, I'll go long on it, knowing that this 36, 37 is my support area. So that's my strategy for going long on Yelp. And I took this chart at 9:50 a.m. Okay, so the stock is done. I show you the charts of 4 markets and their journey. So it's just a journey of the market in a slow motion. So I took the screenshot on 9th of July, and you see it's at 24,776 Dow Jones, this Dow Jones. So you see the journey of the market. So you go up, then come down to 50-day moving average, then went up, hit the resistance at 25,000, hitting the resistance at 25,064, trying to cross at 25,119. Again, went up, 25,199, pull back, still staying at the candle, then boom, went up. So all this has to be taken into account when you're trading. So you have to know, okay, what the market is doing, and then you go long. And I don't have a today's chart, but today Dow Jones went up further. This is the journey of SPX. So 2nd of July, it started with 2nd of July. So it's hugging this trend line. You see, went up, went up further like crazy, jumped up, went up further, pulled back, went up. This is the resistance here at 2800. 2815 is the resistance for SPX. 2801, hugging, then crossed it, went up, exactly close at 2815. I sent the alert that 2815 is the resistance somewhere here, and that's what it did. And then it pulled back. Now hugging at 28, you see, gapped up and went further up. I don't have today's chart. Now this is the main chart, NASDAQ. You see this hugging the 50-day moving average, and this is a bullish candle reversal. So it's just hugging 50-day moving average. This is the journey. It's went up. 7,300 is the resistance level. Going up, pull back a little bit, boom, crossed 7,300, and staying at 7,300. It went down, but it went up, 7,400, 7,390. It's just staying there at 73. This is the journey it took. Again, it broke 7,300 and went up. So the market does this thing, go up, go down, come back down, but is in the uptrend. This is Russell 2000, and you see it's a 50-day moving average. This is the last chart, the journey I'm showing you. This is a very bullish candle for Russell. It's telling us the market is going up, going up, going up. You see side pullback, another pullback, then go up, sideways. It's just in uptrend, it's just a sideways move. Then again going up, and it just keeps going up. Pull back to the support, and it went up. So this is it. Next Wednesday we'll meet again. If you're interested in my 7-month coaching program, we go into details. It's go on for 7 months, maybe 9 months. So send me an email, and I will send you the link to book the strategy session. And the next webinar will be on August 1st at 3:45 p.m. And if you have any question, send me an email, and we will see you on Wednesday. Thank you, and have a nice night. If you have a question, let me see. I couldn't sell Baba. Okay, you can sell tomorrow. It's going up further. All right. So don't worry. When I'm selling something, I'm selling way before the train reaches the station. I jump out because I've gained. So we sold 6 positions today. So when you combine all those 6, the gain adds up. I don't know about Tesla. Tesla is in La La Land. I don't know about anything about Tesla. When it shows up, it will tell me. I will go along. So I have no idea about Tesla. So thank you very much. Should I wait until the market opens? Yes, Friday, you have to wait until the market opens. You cannot sell Baba option when the market is closed. Option don't trade in the regular in the off session. So don't worry about that you couldn't sell Baba. You can sell Baba tomorrow, probably at a higher price. Okay. Thank you. Bye.